Traders often guess, but a professional always follows a plan. A plan cuts fear, clears emotional noise, and keeps you steady in chaos. While others panic, a professional stay calm and deliberate. Today, we start building that control, turning random trades into a system you can trust. Now let's focus on why this plan isn't optional. Without structure, trading becomes reactionary. You chase moves, panic at losses, and question every decision. With a plan, you trade with clarity, discipline, and confidence because each step is predetermined. It turns chaos into a controlled, repeatable process. As we move forward, let's understand the 4 pillars that create a reliable system. Our mindset keeps you emotionally steady, risk rules protect your capital, strategy guides your setups, and review sharpens your growth. Each pillar reinforces the others, forming a balanced foundation you can depend on in every market condition. Let's look at why choosing specific markets matters so much. When you focus on a handful of instruments, you learn their tempo, volatility patterns, news reactions, and behavioral cycles. This familiarity strengthens your decision-making and helps you avoid random trades. Master a few markets deeply rather than many superficially. Now let's focus on finding a trading style that fits you. Your schedule, patience, and stress tolerance determine whether scalping, day trading, or swing trading works best. Scalpers thrive on fast decisions, day traders need structured focus, and swing traders rely on patience over longer setups. Matching your style to your natural rhythm makes trading smoother, reduces stress, and helps you trade consistently. Let's focus on setting goals that actually guide you. Clear targets help track your progress, prevent overtrading, and give structure to your sessions. Whether it's monthly consistency, controlled risk, or steady improvement, goals anchor you in direction. Realistic goals transform vague ambition into measurable progress. Now let's look at how a routine shapes your discipline. Starting with pre-market analysis, checking news, marking levels, and ending with a simple review keeps you grounded. A routine reduces hesitation and brings rhythm to your trading day. The more you repeat it, the more automatic your decisions become. Let's understand why reading market conditions is crucial. A trend, range, breakout, or consolidation each calls for different rules and expectations. Recognizing the environment early prevents forced trades and unnecessary losses. When you trade in harmony with the market's behavior, everything becomes clearer and more predictable. Now let's look at the 3 major strategy frameworks. Trend following captures momentum, breakout trading catches explosive moves, and range trading profits from predictable boundaries. Each strategy thrives in different conditions, giving you structure for almost any environment. Choosing the right template is half the battle. Let's focus on trading with the trend. Buying higher lows in an uptrend and selling lower highs in a downtrend keeps you aligned with momentum. Pullbacks offer safer entries, and structure helps place logical stops. Riding a trend feels easier because the market naturally pushes your trade forward. This is where many clean opportunities come from. Now let's look at breakouts and how to catch them properly. You identify zones of compression, mark strong levels, and wait for a convincing candle with momentum. Breakouts reward timing, patience, and clarity. When you catch a clean breakout, the move is often fast and powerful, offering strong risk to reward potential. Let's understand how to take advantage of ranges. Buying near support and selling near resistance keeps entries high probability. Waiting for clean rejection candles helps filter noise. Ranges demand patience because the middle is messy and unpredictable. Trading the edges gives you the best clarity and control. Now let's focus on what protects your account more than anything else. Risk rules. Keeping your risk small, defining stops early, and aiming for good rewards builds long-term survival. One reckless trade can undo weeks of progress. Strong risk management ensures that even a losing streak can't break you. Let's look at how to size your trades correctly. Using a formula, risk amount divided by stop distance, keeps your risk consistent and removes emotional decision-making. This simple calculation prevents oversized positions and forces discipline. Over time, proper sizing builds stable, predictable results. Now let's understand how to create reliable entry rules. Structure, trend direction, confirmation candles, and volume alignment all work together. When one piece is missing, the setup isn't ready. Strong entry rules keep you from jumping in too early. They help filter out impulsive or emotional decisions. Let's look at exits because they define your profitability. Setting targets before entering prevents emotional exits, while partial profits help secure gains without cutting winners too early. Trailing stops offer protection as moves evolve. Good exits turn decent trades into consistently profitable ones. Now let's focus on the mental side of trading, which affects everything. Staying calm, avoiding impulsive reactions, and accepting losses as part of the process keeps you balanced. Psychology determines how well you follow your own plan. With a steady mind, you execute with clarity and confidence. Let's understand why overtrading is so damaging. Taking too many trades drains focus, increases mistakes, and leads to emotional spirals. Quality setups always outperform quantity. When you wait for clean opportunities, your win rate rises and your stress drops. Patience truly pays in trading. Now let's look at how journaling transforms your skill. Recording your reasoning, emotions, and outcomes reveals patterns you would miss otherwise. It shows your strengths and exposes repeating mistakes. Over time, a detailed journal becomes your personal mentor, guiding you toward smarter decisions. Let's focus on why reviewing your performance brings improvement. Weekly or monthly analysis shows whether your risk is consistent, your strategy is efficient, and your mindset is stable. You get a clear picture of what's working and what needs refinement. Improvement becomes intentional, not accidental. Now let's look at the importance of staying educated. Markets change, so your knowledge must grow with them. Books, videos, backtesting, and mentorship all sharpen your skills. Traders who keep learning adapt faster and avoid getting stuck. Growth becomes a natural part of your routine. Let's understand how backtesting builds unshakable confidence. Testing your rules on historical data shows you how your strategy performs across different conditions. It highlights weaknesses before real money is at risk. With enough testing, your confidence shifts from emotion to evidence, and that's where true belief forms. Now let's look at organizing everything into a clear, written template. Your plan should include rules, routine, risk boundaries, and review steps. Writing it out removes confusion and keeps your expectations consistent. It becomes the document you return to whenever emotions cloud your judgment. Once your plan is written and organized, the real work begins, following it consistently. Discipline is what turns structure into freedom. By sticking to your rules even on tough days, you build trust in yourself and your system. It removes randomness, steadies your emotions, and ensures your results are consistent over time. True freedom comes from knowing every trade was intentional, guided by logic, not impulse, and that your plan has your back no matter what the market does. Now let's recap what we've covered so far. A solid trading plan gives you control, and discipline turns that control into freedom. From choosing your market, style, and strategy to mastering entries, exits, and risk, each step forms a system you can rely on. Journaling, backtesting, and continuous learning keep your edge sharp. Stick to your plan, follow your rules, and your trading becomes consistent, confident, and professional. Congratulations! You've completed the full course on technical analysis, from the basics to advanced concepts, candles, patterns, price structure, indicators, risk management, psychology, building your own trading system and more. You now have the knowledge, plan, and mindset to trade with confidence and discipline. Keep applying, reviewing, and refining your strategies. Knowledge becomes power only when put into action. Best of luck on your trading journey.